Testing, testing, testing. JB here. Hope everybody's doing outstanding. February 23rd, 2024. Let's see if I can turn this off. There we go. Hope everybody's having a great holiday shortened week. Just going to talk about a couple things. I already posted the tickers, and we can talk about other stuff if you post some questions. But first I'll talk about Baidu reports earnings next week. You also have AI. You have you. Yeah, and then just interesting stuff with the chip. So if you read the watch list this morning, I mean, here we are, all-time highs. So many folks over the last, even 6 months, a year, for as long as since 2000 since 2009 have been saying, market crash is coming. It's always seems to crop its head, and then we had the big pull in October into November, inflation concerns, things like that, where people worried about the Fed was going to keep rates higher for longer, and then the market just ramped higher. And I think it's like 15 of the past 17 weeks the S&P has closed in the green. New highs beget new highs, meaning it's easier to get new highs once you hit those highs. I don't know if that means we're going to get to 520 on the SPY, or we're going to continue to go. But I put it a couple times this week. My concern is at some point we're going to have I wouldn't call it a carpet pull or a rug pull, where we're just going to have a big decline. But it's going to happen at some point, not because of any fundamental reason or any news or catalyst, just because it all takes is some folks starting to take profits or rebalancing or whatever, and then you'll have some selling, and then the selling, other folks start to sell. It just becomes a self-fulfilling situation, and then it's like a snowball going down the hill. It starts out a little ball, and then it's just going to pick up steam to the downside. I don't, I looked last Friday, I was trying to play downside on some of these chip names, trying it again this week. At some point, there's going to be a 5 to 7% move on a Friday or a Thursday on some of these names, and those puts that are 20 cents are going to be 10, 15, 20, $30. So that's kind of what I keep playing for. Again, not you look at some of these charts, and a lot of them have RSIs in the 70s, and you would say, oh, those are overbought or whatever. I just look, and I mean, you do this long enough, you've seen this time and time again, where there's pulls in certain sectors. I put this on the watch list after NVDA's earnings. I was concerned there was going to be some kind of reversal. Apple, as it started to become the market leader, they would have a huge beat and raise. The market was kind of wary, but then futures ramped after their report, and then the next day we just reversed and we closed down 1-2%, for no other reason than just people taking profits. So I'm not saying that's happening today or I'm not trying to be a fear monger or put on my bear suit, but that's why when you see me nibble on some of these speculative puts, the premiums are not the premiums, but they seem far out of the money. But if it just starts to move in the right direction, obviously they'll pay off pretty well. So that's why you see me continue to nibble some of these puts in some of the chip names. And I think if you're looking for sympathy moves, Vago and Broadcom, I guess, right, you would call it. That company used to drive me nuts because they would do these acquisitions that just didn't jive with me. I think they bought a software company for $40 billion one year. But anyway, they're talking about it becoming one of the new Magnificent Seven. Now everybody's in love with the name, but I think that creates an opportunity to play for downside. I know Danger got some calls. It maybe goes to the moon next week, probably does, but I'm just here short term. Could have closed the puts. Now it's sitting here at almost 1,300 again, but I'll hold them for now. Plenty of time until the end of the day. What is it? $9 off the highs, off the lows. Sorry, I'm a little under weather, so apologize if you hear me sniffling stuff. So that's one. AMLX. So I had some of the calls back in January when the stock was $12, $13. One of those names, it was in the 40s, sold off for pretty much no reason. 52-week low back in December, and then they had some earnings. Finally, surprise profits, best in estimates. They have stuff in the pipeline, some data coming. So I think there's a lot of reasons why this heads higher. So even if folks are just speculating on data, I put it on the watch list this morning. I talked about on my top 5 stocks for 2024 webinar that I think this is going to be the year of the bio. There's still plenty of time. I mean, it's just February. At some point, I think there's going to be weekends where we're going to have those buyout acquisition news. It used to happen a lot, 2014. I'm hoping we have a repeat here in 2024 with, we have the year of the buyout. We have buyouts and acquisitions, which not only it's good, great, obviously, if you're in a company and you have a position or you have calls, but the other side is you have sympathy moves in some of the other names as speculation increases that there's going to be more buyouts. So went and got those strikes. I think if it heads over 20, I'll get some April calls, but I think it heads into the mid to upper 20s in the coming weeks. So AMLX, love that name. What else? Yeah. Oh, so DWAC, right? So DWAC is the ultimate spec play. There's no fundamentals. It's probably a horribly performing. Truth Social probably horribly performing on a financial basis. To me, it's just I think that it's a proxy for those who are who like Trump or whatever. I'm not trying to make it political, but there's a power behind that. People just bid it up. They did it back when the first SPAC wave hit, and everybody all of a sudden they found out that it was a possibility that DWAC was going to be the SPAC for Truth Social. I remember they had a big, not a white paper, but they had the, and not even the proxy or the S1 registration form, but they just had an outline of what their business looked like. They wanted to be Facebook, Twitter, YouTube, Google, all that in one, right? And obviously that sounds great on paper, but if you're someone who's looking to speculate on a company or position as a proxy, I mean, DWAC, there's going to be FOMO at some point, whether it's going to be next week, the week after. Looking at the chart, it looks like a bull flag. So traditionally, let's see if I don't even know if I have the chart up here. Traditionally, what happens, you take the flag, so the bottom of the flag, and I think it's at $20, to the top of the flag, and ran up to near 50, and then so that's $30. So then you just divide that in half, and I know that sounds simple, but you would think there's at least 15 more dollars to the upside in a very short period of time if it breaks out. So it's sitting here at 48. I think it crazy, but I think it heads into the 70s. If it gets any really picks up steam, hits you got the Reddit folks, the meme stocks. This is one of those names that could be one folks get on board. So I sit here and I try not to sometimes you try to make sense of moves and you look at fundamentals and all that fun stuff. This is purely a speculation play. This is I am speculating that folks are going to bid this up as a proxy. So and when they do, it'll be massive. It's already moved massive, but I think it had 150 when it did the rumors of the SPAC move. So I'll continue to hold that one and look for opportunities to play that for upside. I almost had a chance to lock some of my calls for next weekend for 100%, and I think they got up to 80 something cents, and then it just reverses once it hits $50 and fell back. So hopefully get an opportunity here before the close to lock some of those in to cover costs, and then just ride the rest on DWAC. Excuse me. Fiverr. What else to say here about Fiverr? It's the company reported a nice beat on the EPS side, a little miss on revenue, and then they issued guidance that was below expectations. So it was one of those names that was already under the microscope. I mean, the stock was $300 back in the COVID days, and people think that AI is going to disrupt their product, their service, right? You don't need someone to write a paper for you or to do an advertisement for you or do some kind of illustration when AI is out there that can accomplish that for a nominal fee, right? But I still think, it's like, I'm trying to do a good analogy here, but I still think you need the human touch. You need some kind of intermediary between what you're looking to get done and the AI that may be able to do it for you. I still think you need to have an expert in that field to do it, right? So unfortunately, I didn't pan out. Thankfully, ride and freebie March strikes. I'll probably just wait on the sidelines. I'm not sure if I'm going to play that one till next earnings, but that was kind of unfortunate with Fiverr. Not really going to talk too much about Weight Watchers. They actually report next week too, but thankfully I was able to lock some of my strikes in. But sitting here down at 320, I guess there's rumblings out there still that the company's struggling. We're going to find out. I think it's February 28th they report. My thoughts. I think they're I know it's a bad analogy here too because Roku had some disappointing guidance and some news with Walmart and Vizio, so that stock's well off its levels from a couple weeks ago. But I still think it's going to be one of those companies that benefits from the whole GLP-1 situation and folks looking for ways to utilize not only get prescriptions support You're going to have insurers jumping on board. They already had news on that. LabCorp elevated their employee benefits program to include Weight Watchers or Weight Health, what WW International, excuse me. So I think that's going to continue to be. It's not going away, and I think this quarter is going to be very important for them because it's their quarter where you have people who are doing New Year's resolutions. A lot of people start going to the gym. If they don't have, and for them historically, the Q4 results shows the highest subscriber member base, and then it declines as the quarters go on, and then it resets quarter four again. So it's going to be a big quarter for them. If they don't show a huge subscriber growth, it could be an issue. And then we want to hear about the Sequence acquisition, their new website or the new app that they rolled out that includes that platform. And then the big issue with them is they have been lowering their guidance because of supply of the GLP-1 drugs. So if that starts to come back online, I think they're just in a sweet spot. I mean, sitting here at 310, which is crazy. On the flip side, when it gets under $5, you typically, hedge funds or institutions typically don't allow to have, say, penny stocks per se. Under $5, technically they're a penny stock. So typically they won't let you hold those. So that could be some of the reason why there's been more selling. It almost got back over 5 and faded. So we'll have to see how that plays out. Tight leash on that, yes. Yeah, crazy with SMCI. I think it was a couple of weeks ago when I was doing my rants, and I get the whole, people talking all this about AI and all the, everything that's going to be needed to roll out this new, things that are getting transformed, right? And the NVDA CEO came on and not only talked about 2024 being huge, he's looking all out to 2025, he's talking trillions of dollars to do these, data centers and things like that. So, I look at some of these hardware companies. Sometimes it's low margin, and not saying that SMCI is a Dell or an HPQ, but obviously it's not because it's so bonkers. But at some point you have to, I don't know. Well, so we'll have to see how everything plays out with them. They also did a 1.5 billion offering, which is good. And any smart company, the reason you're a publicly traded company is to have access to capital. So for them to do an offering, I think it's a good thing. But last Friday, I did the same thing. I almost thought it was going to have a couple halts. It didn't. Did it again today, almost up to $1,000, and then it dropped like $50 in a minute. Just remarkable. But I put it on a watch list with NVIDIA. I just don't understand how the company can add $280 billion in market capitalization, 16%. They added 16% just on earnings. So that means that pretty much all the analysts and all the folks out there, most of them had it wrong, right? The market had it wrong. Anyway, maybe that's just me. But so anyway, that's the rant. I'm trying to look at some of the other names. Yeah, so next week, and surprising, I was looking at AI, and you would think that it would have been up substantially with NVIDIA earnings. That has not been the case. Again, it's one of those names that people have been short, negative. They think, a lot of their customers and things, there's a lot of red flags. Maybe that's the case that it trades down here. Same with Unity, right? I think, who was it? AppLovin had a huge beat and raise. That stock's been on a tear. You would think you would be on the same course. That has not happened. So hopefully that one starts to find footing. Roblox, again, it's one of those names. If you have kids, this is one of those companies. It's not going away. There was a lot of that talk last year, especially we had Web 3.0. Nobody's talking really much about Web 3.0 anymore. Well, I guess Meta is, but Roblox is one of those names front and center in that space. And as things start to go virtual, you have the Vision Pro and things like that. Now you're on your Roblox. There's a gas station with advertisement. It's just crazy stuff. And I guess people look at it and think maybe some of the growth is priced in. What's the motor on the business? Yeah, tough one. So I can go on rants for a while. I'm losing my voice. Other names I'm looking at, URI, so United Rentals. I talked about this too. The built $1 trillion infrastructure plan for 2 years and a couple months ago, finally starting to bear fruit. So you're seeing a lot of those companies, accessory companies, right? So if you're a builder or you're doing highways, you're doing warehouses, you're doing anything that's involved with the infrastructure plan, United Rentals is a place you're going to get your cranes, all those things that you might not care to buy, but you want to be able to use, right? So URI certainly plays in that trend. And then the earnings, missed the earnings to the upside on that name. And I said, I got to keep looking for some of these infrastructure names. STRL, by the way, is another one, which is one of my top 5 stocks. But take a look how tight the Bollinger Bands here on URI. So I always talk about tight Bollinger Bands because it's one of my favorite indicators on charts. But typically, tight Bollinger Bands happen when there's a huge tug of war between bulls and bears. And then eventually, one of the sides wins the tug of war, and then the other side falls down, and then the stock either goes up substantially to the upside or to the downside. Obviously, I'm biased to URI. Bullish. I think it heads possibly over $700. So that's definitely a name I'm looking at, but it's just chopping around here. So that's all that's going to do is kill premiums. And there's a Vago over 1,300. And then Burlington, which finally had a decent breakout yesterday, but it got really close to breaking out. And take a look how tight Burlington is. They report earnings, I think, next week. Oh no, in March. I'll have to pull. Let's see. Do I have the date? March 7th. So there's plenty of time. So if you get to the March strikes, it'll encompass earnings. Another name that I think Piper. There was a couple of upgrades middle of January. Once that breaks, 210, 215, 220, I think comes quickly. And I think that's it. VKTX. What else to say about that? I already talked about the year of the bio, but to see it up here at 36 and change without any data yet, and data is going to be out in the next couple of weeks. I think they have 4 key pieces of data in the next. It's supposed to be out before the first quarter's over, so we're almost near the second month. There's only one more month left, which is March. If they come out with oral data that is in line or better, stock's probably $50 or so, and then you have to start thinking. And I think last Friday we had the big move on VKTX from low 30s to 34. On rumors that some large pharma companies looking at them, but it makes sense. You could have got them for $1 billion a couple months ago. Now, was it 2.7? Is it 3 billion now? Excuse me. 3.7 billion. So, then you start doing 50% premium. This puts the stock at $51. 5 billion, maybe 6 billion. Probably gets higher, especially if they have good data. Last one I'll talk about, I guess, and I'll talk about Trupanion. Had the calls last month. Didn't get any for earnings, and then what happens? They announced that they have to revise some of the earnings because of internal control issues. That's the last thing you want to see on a stock that has so many bears on. They're feasting. They smell blood. They've already been completely destroying the company. Like they think this is like the biggest fraud or scam on the planet. When you have when your company has a failure of internal controls, you can kind of make a valid point, possibly that, and maybe there's some meat on that bone. So I'll probably just stay away from now. If the whole story on Trupanion, was one of my top 5 stocks a long time ago, and the stock I think went from 20 all the way to 50 or 60, and in the COVID days it was over. I think it went up to 100, went over 100, but there was some issues. So the company did an offering to buy their home office. And it wasn't like they're buying a home office just for their company. It was a big building that not only do they have to do, they have their office, but then it's almost like they have to lease out to other tenants, which I'm like, so now you're a pet insurance company, but you're a landlord, you're a tenant, you're a REIT, whatever, you're a real estate company. So then I kind of stayed away from it for a while, and then came back on my radar because I think the pet insurance industry is going to continue to gain exposure in the U.S. The thing with Trupanion, their prices are higher than competitors, but they have better deductibles, better pricing in regards if you do have a claim. But I can go on a rant for another day. I'm going to lose my voice with Trupanion, but I'm probably going to stay away from now because until they come out with something that fixes the internal control issue, maybe they need to revamp their leadership team. I don't know. We'll have to see. That's that. Roblox. I'm trying to think of some of the other names here. Yeah, ALT, alts. Same with GPCR, two other GLP-1 names. So you had, the short peaks come out on alt. That's back at $9. Still have March strikes, but I'm going to need a huge move on that for those to come back to life. AMLX, DWAC. I think that's about it. Try to remember back in the day. So back in 2000, I guess it was 2008, 2009, there was only a couple stocks that traded triple digits, which is pretty remarkable because now you look and so many stocks trade over triple digits. So you used to look for names that had inexpensive premiums that traded triple digits that you could play some Friday speculative lotto trades on them. I call them lotto speculative, depending on what because they are lottos, right? And Priceline used to be one of those names, and Priceline used to be so easy to trade. It was a couple $1,000, and it used to trade. Now it's bookings.com, but the ticker was PCLN, and you used to be able to get some inexpensive lottos, and sometimes they'd be really nice paydays. So now you take a look at BKNG, which reported earnings after the close yesterday, and they announced the dividends. They have a huge share buyback program over 4 years that's paying off. But the stock is down 9.5%. It was like nearly impossible to play. I was looking at some of the, well, you can look on both sides. But if you look at the puts, I mean they're up a couple 100%, but you had to pay $10, in excess of $10 or so for strikes that were, $300 out of the money. So, I mean, you're talking $1,000 for one contract to play for a risk reward that on a contract that expires in 1 day. Just, it's one of those names. It's best to own the stock and then sell the premium, right? Or short the stock and sell the premium. Yeah, so that's it, folks. Well, now they have a dividend, so it's probably not the best thing to be shorting that. But that's it, folks. Thanks for listening. This will be up on the blog. Let's have a great day. Rock and roll.